where the data is telling you that this company has issues, those are pretty telltale signs that it's either not going to work out or something drastic needs to change. There have been situations where my teams has said to me, look, we've got to listen to the fact that the unit economics aren't strong enough, and have to make the hard decision of saying no. If we are recognized as one of the most sort of credible early stage consumer investor partner, I think that's success, being that sort of consumer fund of choice.
Alex Malamatinas, founder of Melitas Ventures, has made a notable impact in venture capital by investing in early-stage consumer brands. With a finance and hedge fund background, Alex combines analytical skills with a passion for guiding founders through the challenges of building successful companies. In this episode, he shares his journey from finance to becoming a leading investor in the consumer packaged goods space. He discusses his investment philosophy, highlighting the importance of resilience and vision in founders and the role of early traction in assessing potential. Alex also reflects on the CPG market's evolution, the balance between collaboration and competition among investors, and the trends he finds most exciting. Welcome back to Season 2, Episode 13 of the Turning Pro Podcast. Today we have Alex Malamatinas, the founder of Melitas Ventures. Thanks for joining us today.
Thanks for having me.
Did I get that right?
You did. I'm impressed.
Wow. One go. That's it.
Yeah.
Appreciate you being here today. Would love to maybe start by you just giving us a little bit of background on what you're working on.
Sure. Yeah. So maybe I'll briefly introduce myself. So I grew up in Europe. So I'm half Greek, half Dutch. Grew up in London primarily. Came to the US for my undergrad many years ago. Went to Stanford, began my career at Morgan Stanley, went to business school, and then I guess a less conventional path to VC. So I was trained in the hedge fund industry as a fundamental bottom-up investor. I invested across the board, different sectors and geographies, and then ultimately it came full circle where I was spending the vast majority, if not all of my time on global consumer companies. It's a space that I'm very passionate about. I grew up in a CPG household. So my father was the CEO of Burger King and Smirnoff in the 90s. Actually, his first CEO role was actually Pepsi Italy in the 80s.
Wow. I didn't know that.
Yeah. So I kind of just grew up with, brands, and food and beverage brands around me. So yeah, love the space, and I've always been passionate about working with founders. And so, as I was looking at or analyzing, the large companies in the space, the Nestle's, the Mondelez, the Pepsis, I realized that they were all looking to the early stage for innovation. I've always loved, just trying to help out founders, give advice where I can, and then saw an opportunity to build a venture fund that focuses on emerging consumer brands. So yeah, launched Melitas Ventures in 2018.
The two interests in bottom-up hedge fund and helping consumer founders at the early stages, there's not many people that share that overlap.
Right.
You'd usually think they're on opposite sides of the table. If you think about like private equity guys or hedge funds, they're trying to acquire those companies and carve them out and focus on the profit centers. Where at the same time, like you have these weird competing things that you're really good at this hedge fund, like quant analysis, but you also love working with founders. And so like, are those at odds or should they be at odds?
I mean, I recognize that there may be different skills but I actually see them as complementary. And I think I'd like to think it's helped us at Melitas differentiate ourselves. So I think on the analysis side, and I'm surrounded by, partners and operators and advisors that also have, very strong both skill sets in financial analysis as well as on the operational side. I think that's helped us be more targeted as investors. We've been fortunate to identify companies like Olipop, Magic Spoon, Mudwater, Lemon Perfect early on. And candidly, I don't think people give enough credit to early stage venture investors. Like, I think you can do the work. A lot of people will say you can't, but I think that's helped us. And then yeah, the other side to it being that, I love working with founders and working through challenges, and where I can't help, my partners or advisors can. So
I want to push on that a little bit because I think you bring up an interesting point of like, you can do the work. In your eyes, what do you see as the most important work that you're doing when you're investing at the earliest stages, especially as someone who comes from a pretty analytical background? Because I think there's a lot of people out there who will say that early stage is really just like gambling and betting, but obviously there's ways that you can try to reduce your risk by doing that work. What is that to you?
Yeah, so there's a few things. And firstly, I would, specify that we invest once there's initial product market fit and there's initial traction. So if you're investing pre-revenue, sure, there's very little, if any, analysis that you can do beyond assessing the founder and the team and things like that. So I guess to answer your question more directly, you can already have a viewpoint on the founder and his or her abilities. You can, assess the product, you can taste it or try it. And, it doesn't matter what I think, but there's maybe enough consumer feedback that you can see, do people like this? And is it addressing, a problem or something that consumers are missing? And then the third point in terms of, the analysis, even if there's limited data, there's still data. So if a company's been around, for, call it a year or two, I'll give you a specific example. So when we first invested in Olipop, this was like late 2019, early 2020, they were doing just under $1 million in annualized revenue.
Wow.
But you could see the growth. So you could see year on year it was scaling, and under the hood, like even more importantly, sales velocities were already far in excess of what other beverage brands were in the space. The margins were good. So there's enough there that you can analyze. Of course, not every company with good initial traction does well, but those are signs I think you should be paying attention to. And we've made mistakes as well. I mean, candidly, if you're going to make mistakes, even when the indications are very strong, what I don't, where the data is telling you that this company has issues, let's say, because the margin's too low. I don't know, the margin, like call it less than 40% or less than 30%. It's not scaling. The cash burn's really high. Those are pretty telltale signs that it's either not going to work out or something drastic needs to change.
How have you evolved your investment decision making and your philosophy around approaching a potential investment from maybe when you started angel investing and first entering the space to 2024 July?
I think we've just built out the team more. So now we have a team of partners. We have an analyst, and so
How big is the team now?
we are 5 full time, and then we have 4 advisors. So we between each of us, we're looking into all of these pieces, sort of qualitative and quantitative. So I don't know if anything has changed per se. It's more that we maybe go into even more depth on the analysis than we did before. Of course, you learn from your mistakes. And so, it might sound really obvious, but one thing I've learned is like the founder and team is arguably the most important aspect to all of this. And, there have been situations where, you can get carried away by the brand and kind of overlook, things on the team or margin profile, et cetera.
What do you look for in a founder?
I look for a few things, and every founder is different. First and foremost, they need to be, extremely passionate and resilient. And resilience is arguably the most important characteristic to success, I would say, in general. And for a founder, they need to have a very clear vision, and they need to believe that vision. If they don't believe it, no one else is going to believe it. And then I think they also need to have this delicate balance of conviction and humility. And so, like, no one person can do it all alone. And so the earlier, a founder can recognize what he or she might need to complement them, the better. I mean, some of the more successful founders I've seen, speaking our own sort of portfolio, like, Ben and David from Olipop and, Gabby and Greg from Magic Spoon, they started early on in very complementary skill sets.
Do you think that over time, as the team has evolved as well, you've some specific mistakes that you've reflected on, you've noticed yourself integrating that into new methodologies? And on that note, are there specific mistakes or lessons, we don't have to call the specific company out, that you've made that you can talk about?
Yeah, for sure. So one of them I alluded to. I guess it's like making a mistake, in terms of your judgment on the founder's ability. People can sell you on the dream. And again, as a founder, you should sell, right? I mean, you've got to raise capital.
Yeah.
You've got to build your business. some people sell better than others, and some people will sell you something which isn't reality, and then when you start working with them, you realize actually this is this is not what I signed up for. So I've tried to be a better judge of character and ability. Of course, we all make mistakes, but as we go through the diligence process, really spending more time getting to know the founders, and it's a two-way process. Founders should do the same on their investors and understand, like, are they going to be good partners for them? So I'd say that's point one. And then point two is just like not ignoring the data, right? Like you sometimes, I can speak for myself, I'll get very excited about a brand and you want to invest and you'll say, well, okay, the margins are a bit lower or the sales growth's a bit lower. You'll overlook that. But I think also as a team, we hold each other accountable. And there've been situations where my teams has said to me, look, we've got to listen to the fact that the unit economics aren't strong enough, and have to make the hard decision of saying no.
From a macro lens, looking at like the early stage venture asset class that is investing in e-commerce brands or consumer packaged goods brands, how has it evolved since? I mean, we first met each other like 4 or 5 years ago, and that was right after COVID when all these brands were exploding, especially through digital channels. And it was flooded with a lot of celebrity investors that were backing companies. Some of them are still around. It was flooded with angel investors that, CPG was incredibly hot. And since then, the folks that I know that have continued to build kind of generational funds in the space, yourself included, Kiva included, Coefficient, funds like that, has it weeded out a lot of the, kind of, let's call it touristy investors in the space?
I think the short answer is yes. I mean, the funds that you mentioned, like, there's only a few of us. It's a large space, and we generally all know each other. So yes, there's been a lot of tourist capital. At some point, everybody was starting a new fund. Every branding agency was starting a fund. Every angel investors were starting a fund, and it was a bit of a sign of the times. Candidly, the tech funds were investing in CPG. And I think it's, we've just been going through a cycle, and so, it sort of weeds people out. And sort of, you've seen kind of everybody going a bit back to their swimming lane. So the tech funds are more focused on tech, as probably they should be. And even some family offices that were kind of doing more, maybe doing less in the space. So it kind of presents, I think, a great opportunity for, funds like ourselves that we've been focused on this space for 7 years, to find great founders, and valuations are more reasonable. So I think it's a great time to be investing. The innovation is as strong as ever, and valuations are reasonable.
You mentioned the point around getting to know a founder, and I'm curious from your lens, as someone who has raised some money, like, I think I hear a lot of investors say, we like to get to know founders. I've had investors who are like writing checks on first calls who know nothing about me. I have other investors who didn't even know what company I was building, but have known me for 5 years that were like, here's a check. So I'm curious, in your mind, like, what is that process, or like, what are the important milestones in your eyes to like, okay, I think I know this person well enough to believe the thesis we formed like holds true?
Yeah, it's hard to kind of give like a simple answer to that, but I generally, with time, you kind of build conviction. So I wouldn't say I'm one of those investors to write a check on the first call. I might have a good feeling on that first call, and then I'll try to convince my team, and we'll meet in person, and we'll look through the data. And in some cases, we are able to move pretty quickly. It's just not on that first call. And so within a few interactions with the founders, you just start building conviction. In some cases, it's sooner rather than later.
How do you balance the timing of, on one side, as a venture investor, your job is to say no 99% of the time, and your job is to slowly build conviction. But at the same time, when something does come around that you have a really good gut feeling about based on pattern recognition or the data that you're diving into, sometimes you do need to move incredibly quickly. And I feel like that dichotomy, as a lot of my friends that are investors do a pretty good job at that, like really slow, methodical thinking. And then when they do get that gut feeling, they move incredibly quickly. Has that always been like a skill set of yours, or have you really tried to hone that over time?
It's hard, and it's probably more of an art than a science. So I will, have a very strong sort of instinct or feeling about that there's something I like here. And then it's a balancing act of like signaling interest to the founders while concurrently doing diligence and then presenting a term sheet soon enough. So yeah, it's kind of more of an art, and kind of over time, I guess you evolve your style.
What are red flags in first couple calls that you've seen from founders, obviously, that you haven't backed? What are some immediate ones that come up?
I mean, the first one is if people are just not honest.
That's a good one.
I mean, it happens, right?
Give us an
People tell-
example. Anonymize it.
I mean, I'll keep it general, but like if somebody tells you that they did a certain amount of revenue or they will do a certain amount of revenue in the quarter, and the quarter is just finished or just about to close and you're far off, soon enough you realize, and then it's tough to kind of maintain trust and integrity, which is so important as in anything, but let alone as you're trying to build a long-term relationship in venture. I think the other thing is, and it's a little bit stylistic, but and it's a balance. Like sometimes like people can be too aggressive in that initial pitch. And again, you got to sell yourself, but you also got to build that trust and relationship. And so that's fine. I mean, there's investors like you mentioned where they'll write a check on the first call. We're just not that investor. Like we'll need at least to meet in person, a couple meetings, and maybe we can build a conviction. But yeah, some, I guess it depends. You got to find the right fit on both sides.
My favorite question, what's your biggest miss?
It's a good question. So time will tell.
Good answer. Very diplomatic.
I'll give you a specific answer. Like, I passed on Liquid Death at a 20 million valuation.
Wow, I didn't know that.
Yeah. So I thought it was expensive at 20 million. I think it's a lot more expensive at over $1 billion, but they've done very well. I probably should have invested given the traction. Fortunately, I did invest at Olapop at a 22 million valuation, so you can't win them all. But yeah, that's probably one that comes to mind.
Do those keep you up at night?
No. The ones that keep me up at night are the ones I'm involved in. Because you want them to succeed. At the end of the day, you only need a few properly sized positions to, return each fund.
What are the ideas that founders have about venture investors? In this case, specifically brand founders versus, brand investors or consumer investors. What are the notions that they have that just aren't true?
It's a tough one. I mean, I think I'm trying to generalize, but we, I think, are, play an active role with our companies and can help them everything from production to marketing to retail to DTC all the way to exit. So I think there's a lot of areas in which we can help. But even in our case, it's not us, it's the founder that's driving the company. And so I think most founders get this, but it's try to find, first and foremost, an investor who you have good chemistry with, or you can trust. And secondly, somebody that can help your company succeed, but it's you that's going to be driving it. And so maybe in some cases, founders sort of think oh, well, I'm lacking in marketing or retail, so I'll get this investor and they'll solve all my problems. It just doesn't work that way.
What balance do you typically look for in, say, first-time founders, or maybe they start a software company and they're coming into CVG for the first time? They don't really know the ecosystem, but they're smart, ambitious. They clearly can get up to speed quickly. Versus second-time founder, maybe you don't like the idea as much, but they started a CPG brand, maybe got Aqua hired or something. How do you balance those two, experience versus naivety?
Yeah, I mean, I've had mixed experiences with both. I mean, candidly, I used to ascribe higher value to a second-time CPG founder. Of course, there are some people in the business that have had 2, 3, 4 successful exits, and I'd say they're more the exception to the rule. But then there's other people that, the second time they build a business, they set sort of the company rules just based on what succeeded last time. And the environment might be different. The business dynamics might be different, the category dynamics, and often they're pretty kind of stuck in their ways. So it's good and bad. Whereas if they're coming from software, a different industry, maybe they're more open-minded and more flexible with their thinking, but also have the experience of having built a company. So it really depends. I mean, we have founders that were lawyers, that were in finance, that were in CPG, that were in tech. big corporate. So it really varies.
What categories or trends are you most excited about right now?
Fragrance is one that I think is really compelling.
Who just mentioned that?
It was Jay.
It was Jay. Yes.
That's so interesting.
Yeah.
Our first podcast today was talking about fragrance.
I think some of it is like it's just consumer behavior is evolving, right? And so like the large companies like the Givaudan's of the world and like all the big brands, Tom Ford, these are all like premium, expensive products that command loyalty, and like people will just keep paying a high price and they benefit from very high margins. Gen Z doesn't like is maybe not as loyal, and I'm generalizing, to like one brand, and is maybe less keen to spend as much money. And so there are some brands that are now offering similar fragrance and or quality at a much lower price point, and they are offering more different types of scents, which is also appealing to people. So I think it's driven by consumer behavior.
Any others?
Yeah, I think like global or multicultural foods is an interesting space. So kind of what Siete did. Now there's some Asian brands, some Indian food brands and condiments. I think sort of the country is ready for that. And there's some great tasting, sort of better for you brands. Supplements is always very interesting. Fem care is interesting. Pet continues to be interesting.
I love pet.
Yeah.
I mean, I think I don't have much context on pet like 5 years ago from an investor perspective, but once COVID happened, it just completely accelerated the Gen Z population of buying dogs, which was the first thing. And then it was like you take the fact that all these younger kids have dogs and you pair that with the fact that there weren't many like Gen Z focused brands in the space. I mean, some of the numbers that I see with some of these pet brands that we work with and like others that people I'm friends with are absolutely crazy to me.
Mm-hmm.
It's a great customer, right? Because your pet doesn't change their mind as frequently as we do, right? So if you can find like a pet food brand that your dog or a cat likes, you're likely going to keep reordering it, and that makes for a great business, right? Retention is generally higher. We were fortunate because we were early investors in Nom Nom, which is a fresh human grade pet food company, sort of digitally native. And then in COVID, to your point, saw the tailwinds, and so grew even faster. And there was this increased sort of movement towards fresh human grade, and so people buying more dogs and then wanting to offer their pets healthier food. Fortunately, that was our biggest investment in the first fund, and we exited at the end of 2021.
I think what my like mini beta test for whether something is entering mainstream is I will order something to my parents' house down in Miami, and I'll just stock their fridge for like a month. And the first one was the lemon ginger Olipop that has been on subscription because my mom drinks it every day for the past year. And then the second
These ones
one
are my favorite Olipop.
Yeah, I like that
The
one.
lemon
So-
lime is my favorite.
I don't think I've tried that one.
Oh, you
Yeah.
should.
Try it
It's
after
good.
this.
And
That-
and Orange Crush.
I
is
think
good.
I started drinking this more when I stopped drinking alcohol because I really only drink water.
Right.
And when I wanted like a little bit of flavor
Yeah.
aside from water, it was usually this.
But I feel like there's a big discrepancy because there's some better for you that the original tastes better. And then there are some that genuinely do taste better.
Right.
Like, I don't know if you've tried, I know you invested the masa chips, those like beef tallow chips. I'll send you some. Delicious.
No, I'll grab them some.
I think they're better than
Griff, will you
Tostitos
check
or
above
something.
the fridge? There's got to be a bag.
I
up
think
there.
if you did blind, like Tostitos next to that, I prefer those.
They're
The
basically
crunchier.
building Lay's with no seed oil in like one sentence.
Yeah.
Yeah, there you go.
Shout out masa chips. You can
He's got to
taste-
give
you
a
can
live.
taste
He's
them
got to give a
after.
live taste. I'll send it to
Oh,
Seth.
I've seen the brand.
You got to open
Who's
it.
the founder?
Seth Goldstein, and then he has a partner, Steven.
Okay.
Seth was a finance guy, left a 7-figure PE job to start this.
Right. He was a guest. What?
He was early on.
Yeah.
I can't wait to send this to him. You got to be brutally honest.
It's really good.
Aren't those? I don't know if I've had that.
It's indistinguishable.
Wow. Can you introduce us?
Yeah, 100%. So they,
I love this.
you
Finding
know,
our next investment.
Aren't
So-
these good?
Yeah.
one of the I'm gonna send them
Monster
two. I'm gonna
chips.
send them 2 deals. I have
Right.
optimism here. What's really amazing about it is that one of the founders like won't even walk into a restaurant that uses seed oil. Like very much lives, eats, breathes, sleeps like what they stand for. And then the other founder is like, he's a capitalist. Like this is an amazing
Who's a
opportunity.
hedge fund guy now?
What?
Equity?
Private equity.
Yeah.
But Steven, the other founder, like won't touch anything with seed oils, which I appreciate in a founder when
Yeah.
you actually embody the thing that you're building.
Yeah.
Totally.
I think those there are the handful of brands that like this actually does taste better. Like Lemon
Yeah.
Perfect. Similarly, I ordered it to my parents' place.
Yeah.
And they love the peach raspberry or whatever
Right.
it is. And they like that better than the thing like whenever they have homemade lemonade with sugar, like they actually like it better.
Well, that for me was like a key sort of awakening moment when, like, a few years ago, I had the realization, which many have, that you don't need to sacrifice on taste. There was this perception, I don't know, 10 plus years ago where, if it's healthier, that it doesn't taste as good, like the initial vegan restaurants, right? And so, whereas these days, there is no reason why you shouldn't be able to get like a product that tastes equally good or better that's also better for you.
Have you tried those like barbell protein bars that are everywhere?
No.
Yes,
Those are delicious.
dude, I was eating them like candy bars. I stopped ordering them.
Wow.
Like I was literally just eating way too many of them.
Oh.
Like they're so good.
Yeah.
They're not bad for you, but I don't know. For me, I think I went through this phase where I realized that like a protein bar is really just like a chocolate bar. There are healthier ones, but when you just eat them too frequently, I was like, I can't have these in the house because I can't do things I can't do things in moderation when it comes to food. So I'm not a big snacker. This is like one of the only snacks that we had. The matzo chips are one of the only snacks in this apartment.
I remember mid-COVID, I would order just bunches of Magic Spoon to the place that I was staying, and I'd eat like 2 of the boxes within a day or something. And I was like, okay, this isn't working for me because I have no control over like something
It's good for
sweet.
the brand.
Yeah, he's like, keep ordering them. To your point though, around like, I agree with you around this misconception of like, if it's healthy, it probably doesn't taste good. My perception of it is that it's twofold. It's convenience and it's price, right? Like I think a lot of people, why do they eat at McDonald's and Burger King? I think part of it is the price of it, but I also think there's a part of it that's convenience. It's just like easy, it's accessible, it's there. Not every better for you brand has the same visibility that they do. And so like there's like the lower middle class who doesn't really even know about a lot of what's going on in like the better for you ecosystem. And so I think breaking those barriers down with a product that's affordable is like very challenging, I think.
Yeah, and I think, that's why for many of these brands, again, like a Magic Spoon and Olipop, once you break into like a Target and a Costco, then suddenly, the whole population has access to these brands and they can order it online or they can find it in most stores. So they, these brands really have a shot of competing against the big established ones. Price point's an interesting one because generally these better for you products are more expensive than your mainstream products.
Totally.
And people will generally pay up for a healthier product. The question is how much. And in a quote unquote recession, will people keep buying? And that was a fear of many people. Many people were concerned about a sort of pending recession that hasn't yet come. And will people keep paying a premium for Olipop and a Magic Spoon? So far, they are.
What's your perspective on that at large? Like, do you think premium better for you products are recession proof, or do you think it's category dependent?
I mean, it's tough to kind of give you a blanket statement on that because some are, some are not.
What do you think are the differentiators from like a variable perspective that makes some like recession proof versus others that aren't?
I think like going back to pet and baby food are a little bit more recession proof because if you've decided you're going to feed your dog and or your baby healthier food, it's going to be the last thing that you're going to cut to say, I'm going to go back to a lower price point. It would also be, I guess, a big decision to kind of say, okay, you're buying all this Magic Spoon, now you want to cut down on your spend and go back to Kellogg's. But maybe, right? Yeah. It just hasn't happened yet. And generally speaking, when consumers have made that leap, they're less likely to go back. And if people do, it's generally a portion of the population, but not all. So as long as these brands are reasonably priced and, serving or offering you their value proposition, I think they'll continue to succeed.
I think especially with better for you, a lot of people overlook the fact that some of the changes that are being made, like my dad used to drink a lot of Coke.
Yeah.
And now he'll drink, like after a workout, he would have like a half of a Coke or something. It's really not good for him. He's like 65.
Right.
And now he'll have coconut water. It still kind of gets something sweet. Like
That's a crazy shift.
I mean, it's still sugar. And it's refreshing,
But it's better.
and it's better. And so I think a lot of us in New York, it's like, okay, after a long day, am I going to have like an Olipop or a Diet Coke
Right.
in the bodega? Like that's not that big a deal to our lifestyles. But for a lot of people, like if you do get it in the
It is,
hands of mass
yeah.
population, it does have real impact.
For sure. And the other reality is that, it's easier to reduce your price than increase your price. So generally these products start at a higher price point, and then over time the price point comes down at scale, whether it's with a strategic or on their own.
Yeah. I'm curious in your own personal life, are there any, I feel like a lot of the time as you're looking at all these consumer brands, you're learning all the time about seed oils. This is good for you. This is bad for you. Don't eat this. Don't eat this. Does that ever permeate your personal life where like you'll be hanging out with friends and they're eating things that are terrible for them? And you're like, hey, can you substitute it with this? This is going to be better for you.
Yeah, I mean, all the time. And like, as the deeper you kind of look into these things, the more you discover that there's like unhealthy products out there that people are overlooking. Yeah, I mean, in the early days, it started with kind of Olipop and Magic Spoon and some of these other brands. And yeah, I pay a lot of attention in the grocery store, and sometimes I get sort of inspiration to find like a better for you product in a category where we haven't seen innovation yet.
What does your pantry and fridge look like?
I mean, I have a lot of our
I've seen your
products.
office. I haven't seen the pantry.
Yeah.
Yeah, but the office is like the public facing one where
It is
people are coming in there.
public-facing.
So you got to follow the rules a little bit more there than at
Fair.
home.
I mean, in my fridge, I have like Olipop.
Like I have hundreds of olives.
Yeah. In fact, in COVID, my wife was pointing out that like half of the fridge was like Melitas products and other products, because we try products all the time. But yeah, it's a fun part of the job.
Do you have a favorite product within the portfolio that you really, really are a fan of?
I'm curious
Yeah.
through the lens of personal use.
Yeah.
I mean, it's hard to point out one, but like, yeah, Olipop and Lemon Perfect, I drink on a very regular basis.
Yeah. I'm a big fan of the small I think the liver doses.
Oh, yeah. So Dose is another one of my, so Dose,
You see
the
these little
functional
shots?
wellness shots.
I don't think so.
Oh, you
yeah.
got it.
There's like, it's basically Dose for your liver, there's Dose for cholesterol, Dose for skin, Dose for immunity. And it's a shelf-stable, healthy, great-tasting shot. Yeah, we're the lead investor. They've done incredibly well. I take, 1 dose cholesterol a day.
Really?
Yeah.
I got to get that for my dad.
Yeah, you should.
I was thinking of getting it for my parents.
And the liver health products. Great.
Yeah. It's like his family had connections where they were producing a lot of like ingredients in mass, I think in India.
Pharmaceutical business.
The founder of Dose?
Yeah, the
Yeah.
founder is family connections, and then I mean, you can tell this story better.
Yeah,
than
and then young guy, right, Vasu, and he moved to Santa Monica, and we met him early on, and he had this very clear vision for the brand, and we met him actually in COVID, just I guess around the time we met, and he was just launching the brand, and has done an incredible job, like straight from the beginning, and so fortunately, we partnered with him, within the first few months, and then subsequently led the seed round.
How do you think about investing in, there's that famous line about investing in lines, not dots. So like long-term relationships. A lot of the time, founders will text me, say if one of us introduced them to an investor, and they'll send a screenshot, the investor passed. It's like, well, yeah, you met him last week and you're trying to close the round. That's not that big a surprise. They say, what should I do? I'm kind of frustrated. And it's like, look, it is their job to say no. And a lot of the time, they will come back. And if you show the right traction, they might invest. And then that's happened with Melitas a number of times.
100%. And look, I mean, obviously there's emotions, right? You're trying to raise capital, and you got to do what you got to do, but it might not be the right fit for the investor, might not be the right fit for you. So I think everybody's got to respect that. And I think if you sort of take a rational approach, it's a small industry. It's good to keep good relationships, because they might refer you to somebody else. They could be helpful one day, or to your point, Adrian, at some point they can invest. I mean, we've had that experience with a couple brands where we initially didn't invest. It was too early, or it was a reason why we didn't invest, and then ultimately we did.
Do most founders know that? I feel like that's not as talked about.
It's not as talked about, and I think people, when you say no, they just assume that's kind of the end of the relationship.
Yeah.
I think it stems from a larger like philosophical understanding as a founder, is that like you never know when someone's going to come back around in your life, and like you
Totally.
don't want to burn a bridge.
Totally.
But like I think there's a lot of emotion, there's a lot of ego involved, especially for first time founders when they take it personal. I mean, I'll be the first to admit, like when I tried to raise money for the first time, it's like the first person that says no, you're like, what the fuck? Like, why not? Like you don't understand it.
Yeah, it's really hard. I mean, and by the way, as funds, we raise capital too.
Yeah, totally.
I
I'm
mean,
sure
there's
you've had
people
plenty
I've
of
been
LPs who tell you no, or
Right.
potential LPs.
Right. I mean, and there are people that I've been speaking with since I launched our first fund, and they're still speaking with me and claim to be really interested, but maybe haven't invested yet.
Yeah, like by the time you get to like your fifth fund, like, all right, you know what? I've seen what I wanted. Here's 500K, and they'll be the loudest person in the room.
I mean, of course, at some point, you've got to maybe draw the line.
No, of course.
But yeah, why not?
What is life like away from work for you? What do you do for fun?
Well, I try to stay active. I mean, I used to play, more sports. I used to love playing soccer, tennis, basketball. Yeah, so these days, I guess watching the Euro Championships
That counts
is
as
fun.
playing soccer.
Yeah, no, it doesn't count.
Big games on Friday.
Yeah.
Spain, Germany is going to be fun.
Well, and this weekend, so I told you I was half Dutch. I grew up supporting the Dutch team, and my wife's Turkish, so that's going to be a heated game.
That Turkey game was incredible.
Yeah,
It's been a big summer for soccer fans.
it's a great, I guess, month for sports. So
Yeah.
Wimbledon as well as other sports. So yeah, I mean, these days I go to the gym, I run, I play tennis.
Are there any hobbies from childhood that you have rediscovered over the years?
Huh. I mean, tennis is one that I've recently started taking up again.
Where do you play?
Well, that's part of the issue. It's not. I mean, in the West Side, there's some courts, but
And you sit there for 45 minutes to
Yeah.
wait to get one.
exactly.
You actually have to.
Yeah, isn't it first come, first serve?
Yeah, it's
Brutal.
not. It's not easy to play in the city. I mean, this is more of like a relatively more recent hobby, but I cook and I love cooking and bringing in your own ingredients, and I find it very meditative. So I enjoy that.
We just had someone on. Do you know the brand Thesis?
Yeah.
He was a chef at a 3-star Michelin
Is
restaurant.
this Dan?
Yeah, Dan
Yeah,
was
yeah.
on earlier.
He was on 4 hours ago. Or
Yeah.
something like
I
that.
didn't realize that. I mean, I know Dan. He's a great
His
guy.
his whole journey started
Wow.
in culinary,
amazing.
and he was a sous chef, I think, he was
France?
whatever term that I'd never heard. One of the
Executive
ranks.
chef.
No, but there was a word or a term that I
Sous chef
wasn't
is like the
familiar.
second.
No, I know, but he used
Saucier.
So he was a saucier at a 3-star Michelin restaurant in was it in France?
He was in Paris.
Yeah, and then that was like the first step where he's like, I don't want to do this anymore, and one thing led to the next.
That's
and now
a
it's on
tough
Thesis.
job. I have so much respect for chefs and people that work in the kitchen. In fact, I've been speaking with the founder. We haven't invested in the brand, but he used to work at Blue Hill, and
In the city
he used
or
to work
upstate?
with Dan Barber upstate,
Wow.
and incredible like restaurant and establishment, and their like level of detail and focus is just
And work ethic.
incredible, and work ethic. Yeah.
When you're in the day to day or week to week, what are the most stressful parts of the job where you get frustrated, your head's hitting a wall? Is it when a portco isn't doing well, when you're struggling fundraising from LPs, or conversations are taking too long?
Yeah, I mean, it's a combination of things. I think it's always, I'd say, challenging when things don't go well with portcos. And I think the unfortunate reality is no matter how good you are as an early stage investor, there are always things going wrong, whether or not the company succeeds. So I think sort of recognizing that and getting better with managing your emotions is very important, because otherwise you can just drive yourself crazy.
Like when you see a founder making objectively poor capital allocation decisions and you're just like, what is going on?
Well, and it's like it's like any relationship. You got to work on it, right? So you got to really, you can't just like point fingers at each other. You've got to be there and talk through it and try to get through it. And hopefully you do. In some cases you don't, and it's really unfortunate. And then you got to move on.
What does the future look like for your fund? Like how do, fast forward a decade, like what does success look like to you?
So I think for us, like just keep doing what we're doing. I mean, back, the next generation of better for you consumer brands, and hopefully we keep growing as a fund, and it doesn't need to be necessarily in terms of AUM or going to the next stage. If we are recognized as, one of the or the most sort of credible like early stage consumer investor partner, I think that's success. And that's from everyone's perspective. That's from the founder's perspective. That's from our LP's perspective, our co-investors' perspective. So really being that sort of consumer fund of choice. Of course, you named a few funds, and the VMGs and L Cattertons have done a very good job sort of establishing themselves in the later stage, and hopefully we can do the same for ourselves, at least in the early stage.
How do you think about relationships with co-investors? Because say there's, company did a pre-seed, they're growing like crazy. You have enough traction that you guys could actually invest, and there's $3 million seed round. Say you could put in 2 or 2.5, and if there's only 500K left, how do you think through you want to work with your co-investors that you share a lot of deal flow with and that you respect, but also there's only 500K left. I can't be telling you about these deals. Maybe I'll introduce you to angels instead. How much is collaboration versus sharp elbows? Because a lot of that is pretty diplomatic.
Yeah, it's hard trying to find the right balance between collaboration and competition, right? And I think in the space, it's generally a collaborative space, I would say, compared to certainly the hedge fund industry. And at the end of the day, it's a long-term game, right? Like you got to build your trust with your co-investors. So yeah, I think it's more important to build collaboration and trust. But there are certain situations where, you're maybe competing. I mean, I've been in situations where, some of the other funds, like we're very close friends, but we're competing for the same deal. And I've been in many situations where we've both been in the same round, and that's maybe the ideal. But there are other times where there's maybe only
The unit
one
economics don't allow for that.
I guess so. Yeah, exactly. That's the business model, right?
I gotta say, I think competing in a respectful way, like above the line with friends, is. I mean, it's like you're playing paddle with a good friend.
Right.
I think it's one of the most fun things you can do.
I agree. I mean, I don't know if it wasn't a great documentary, but I don't know if you saw the recent documentary on Roger Federer.
No, I haven't seen it yet.
Yeah, so he's a brilliant guy, sportsman, and gave a great graduation speech worth listening to.
The Dartmouth one.
Yeah,
that was a good one.
But he talks about his relationship with Nadal, and Nadal, talks about, and they're getting very emotional about this. And these guys, like at the top of their game, they're competing, but they have so much respect for each other. So it's to your point, like you can compete, but with integrity and have respect.
Yeah, I think it depends on the industry in which you're in, especially when it gets like early stage.
The people, right?
And the people. I think especially like early stage B2B SaaS right now, especially with like Gen AI, is incredibly saturated. And there's not only 3 to 5 to 10 firms that you all mutual respect, and you kind of know each other's swim lanes, and maybe there's 2 or 3 that you come up against a lot. And that's the friendship, that's the mutual respect. In some kind of micro industries, there's just like dozens and dozens and dozens of funds. Yeah. And sometimes you just need to move faster than others. And it's not always above the line, which is unfortunate, but just that's the volume of the competition.
I think I guess we'll wrap with one more question for you, which is based around the premise of the show. So looking back on your career thus far, what has been like one very big turning pro moment for you where you feel like you just kind of took things to the next level?
I think officially launching Melitas. So in 2018, I think, our first fund, I think it was officially, sort of July 2018. That was sort of my moment, right? Because before that, I had made, I had invested in publicly traded stocks. I had made angel investments. In fact, some of my early investments, Kin Euphorics and a couple others, they were angel investments that then sort of evolved into Melitas investments. And I think being able to kind of then talk to a founder and saying, look, I'm managing a fund and we're institutional capital and we can back you and we can back your subsequent rounds was probably my first step, and a very gratifying one.
Was that moment, were you excited and passionate and ambitious, or was it a little terrifying?
Or both.
You could be both.
A bit of both, but mostly I was just extremely excited to be in a position where I could, do what I love and do it for work.
Beautiful. It's a great place to wrap. Can you talk to that camera on the left? Just tell them about where they can find Melitas online.
Sure. Yeah. So melitasventures.com. You can also follow us on Instagram. And yeah, please reach out to us on info@melitasventures.com with any of your ideas. We'd love to collaborate.
If you're an early stage, better for you food and beverage brand, talk to Alex.
It's really broader consumer. So better
Yes.
for you consumer brands. Yeah.
Awesome. Thanks for coming on today.
Great.
Hell
Thank
yeah.
you.
This is great. That's
Great
a pod.
to be here.